Hi everyone, it's David from Lim Power. How's everyone doing? So today I want to cover a little bit about why you should use a mortgage broker instead of going to a bank to talk about borrowing capacity. So 3 main key points I want to cover today. Number 1, brokers work on customer purpose, whereas lenders work on transaction. What does that mean? So years ago, I've been using NAB. I'm a customer of NAB for a long time. I've always had a savings account with them. I've always transacted with them. So naturally, when I was looking for a loan, I would go into a NAB branch and ask the customer service representative to tell me how much I can borrow. It's quite common because people do have preferences in terms of their banking. That is perfectly fine. But when you think about it, do they actually have customers' best interest at heart? That is the question. As brokers, we understand, we work on a relational basis with the customer. We understand what you're trying to achieve, and then we will actually work on structuring the loans and then work out your borrowing capacity from that point onwards. Not just based on transaction. Bank may have relationship managers, which seemingly it's relational. However, at the end of the day, those relationship managers also work for their bank. So they will do whatever that is best in the interest of the bank rather than at the interest of the customer. So that's number 1. Number 2, are you looking to buy a home or investment property? That question will also determine your borrowing capacity. Because the fact that during servicing, investment property does have a rent, and most lenders will actually consider using that rent as part of your servicing, which means from income perspective, apart from your own salary, we will also be able to factor in that rental income as part of your income in order for you to be able to borrow more. So the outcome usually is based on whether it's a home or investment property. That will also determine your borrowing capacity. Now, number 3 is about loan structuring. And this is probably one of the main distinguishers between a mortgage broker and a bank. What is loan structuring? So loan structuring comes about as mortgage brokers understand what customers are trying to achieve, and in order to be able to work out which lenders to use in order to satisfy and to help the customer move towards that goal. Banks don't consider that. If you go to a bank today, all you're going to get is, okay, well, here's how much you can borrow, period. Now, for mortgage broker, we will be able to tell you, okay, for lender A, here's how much you can borrow. After that, for lender B, here's how much you can borrow. There might even be a lender C afterwards too, depending on your serviceability. And having that structure in place will allow a property investor, for example, to be able to go, maximize their borrowing capacity. Whereas if a property investor today just goes up to a bank, which he or she usually banks with and have preference to deal with, then all he or she knows is that figure which the relationship manager gives to. So that's really where the difference comes in as well. Loan structuring, which on a mortgage broker, because we have access to numerous number of lenders and on our panels, that's why, based on your goal and based on what you're trying to achieve, that's how we can actually do that loan structuring for you. So that's what I want to cover today at a high level. If you've got any questions, feel free to comment below. Like our channel, there will be more videos coming through, so keep an eye out. Let me know what you like. Let me know what you'd like me to improve. And until then, I hope you have a great day, and I'll see you next time.